Good afternoon, everyone. Welcome to the GST 108 webinar series. And today's topic is going to be analyzing GSTR 1 and GSTR 3B. Before we start off on the webinar, I would like to first give a brief explanation about who we are, just to give a brief background about what KYSS is. So this company was founded in 2019. And the primary goal of the company was to basically help the MSME business owners with everyday business issues. Now, it could be working capital, it could be GST, but MSME owners across different sectors of accounts and compliance face a lot of challenges, including working capital. And it was the primary mission of the company to help these MSME owners with these everyday issues. And basically, the founders of the company come from background where they have helped MSME owners before in various capacities. And that's how they decided to come together and form this initiative of KYSS and of JITFinco, which is a lending arm. Presently, KYSS serves about 18,000 customers across 22 states. And for these 18,000 customers, we are roughly tracking about 24 lakh suppliers on a monthly basis. The company is basically digitally enhanced tech capabilities, and they are based out of Bangalore, and a lot of this is dependent on tech platforms, whether it could be the lending or whether it could be the GKYSS vertical. Now, in specific, what are our product offerings? The first and most critical product offering has been the working capital lending. Clearly, for MSMEs, managing their cash flow issues and the GST obligations also can be very stressful on the cash flow. And with that objective, this working capital lending program was started. And so the advantage of this program is the turnaround time is very, very low. You will be able to get a collateral-free loan. The whole process is fully digitized with a very, very minimal turnaround time and very minimal documents as well. So that is the USP of this program. And this comes under the JITFinco product. Under the KYSS in specific, we have a few products like the GST reconciliation. After introduction of the input tax credit, reconciliation rules, and the various notices that are coming, it becomes very, very important to be able to reconcile your data that is in the books of account with the GST data. And one of the most important reconciliations is with regard to the input tax credit, and that's the reconciliation with the purchase register with the GSTR 2A and GSTR 2B. This is something that's very critical for MSMEs because this means that you'll be able to claim your maximum input tax credit. And without this reconciliation, claiming that input tax credit becomes a big challenge. So this was the objective of introducing this GST reconciliation product. Something that's very closely related to the GST reconciliation is the supplier tracking. Now, to be able to ensure that your input tax credit can be claimed in full, it is extremely important to understand whether your suppliers or your vendors are they filing their returns on time? Are they filing their returns correctly? It's very important to know this. And for that, it's very important to know your own supplier. And that's why we thought a supplier tracking or a supplier analysis can be very, very important for MSMEs. Before you onboard a vendor, before you start working with a vendor, it's very important that you're able to track the GST filing records. And this will help reduce the ITC input tax credit losses. If that is the supplier doesn't file his returns, you lose input tax credit. To avoid these kind of issues, the supplier tracking becomes very, very essential. Another very important KYSS product is the e-invoices and e-waybill. I think most of you will be aware. And for those who are not, e-invoices today is applicable for companies with a turnover of more than 20 crores. That was the 1st April modification in the law. That 20 crores has now been made 10 crores with effect from 1st October 2022. That 10 crores turnover is further being brought down to 5 crores with effect from 1st January 2023. And with effect from 1st April, that is 6 months from now, every business with a turnover of more than 2 crores will have to be mandatorily on the invoice platform, generating invoices on the GST portal. So considering this, that the government's objective was to bring in all businesses on the invoice platform, it looks like they're very quickly moving in that direction. And this e-invoices becomes extremely critical. And that is why we have a very seamless e-invoice software, which will very easily allow you to raise your invoices without much additional burden in terms of manual data entry or in terms of reconciliation. Very easily you'll be able to raise your invoices and the e-way bill for movement of goods on our very, very simple to use software. So that is another product offering of the KYSS. Now, when all of this was being done, another thing that crossed the mind of the founders and of the whole team was that a lot of these MSMEs have a lot of questions on GST. It's not a very, very straightforward law. It needs a little bit of understanding. And there could be a lot of business related and GST related questions that the MSME owners might want to ask. So we decided to start this personalized helpline called GST 108, where you are able to reach out to our customer success teams, ask your questions, and you'll be given an answer from the GST expert team that is sitting in the company. And that is the objective of this GST 108 helpline. And this webinar also is one of the offerings of the 108 helpline, where we are conducting such monthly webinars on different issues in GST and trying to build awareness of the law amongst the MSMEs so that you can very easily comply with GST. You can be rest assured that your accounts and compliances are up to date, as well as you can be rest assured that you will not be getting any notices or any mismatches of any kind. And that was the whole objective of doing this GST 108 helpline, where you can very easily reach out to us and ask us some of these questions. So this is a brief background about the company. My name is Arvind, and I am involved as a GST expert with the organization, and I will be running through today's webinar as well. So today's topic, in fact, after doing a lot of webinars on various related legal aspects of GST, we thought it's time to come back to the basic. While it's important for every MSME to understand the GST law, what is happening in terms of output tax, input tax, we also realize that it's very, very important to know what you're filing on the portal on a month-on-month basis. It's very critical to know what your GST returns means. And that is why we thought of bringing this webinar, bringing this topic today in this month's webinar series. And we will be going through the different types of GST return here, but in very specific, the GSTR 1 and the GSTR 3B, which is the most critical for any non-composition GST dealer. If you're composition, you have a different return, but if you're non-composition, a regular trader, regular manufacturer, regular service provider, it is very imperative to know very, very well what your 1 and 3B, what the fields are in those returns, and what exactly is in terms of data that you need to fill in these returns. And that is the objective of this month's GST returns webinar. So we will straight head into our topic. So there are multiple types of GST returns. Let's understand very, very briefly what this basically means. Before we start on the different types, just to give an initial background of what the plan was of the government. GSTR 1 has always been the same plan. There was no big change. They always believed that this would be a return on outward supplies, on all your sales. That was the initial plan anyways. And then GSTR 2 would be the return where all input tax credit would get reconciled. The government also believed that this would be a return which would work two ways. One way is that whatever is filed by your suppliers, by your vendors would anyways appear there. You would be able to add data, modify data on that if there was any mismatch, and that would get communicated. That was the initial understanding that GSTR 2 would be a two-way kind of a return, where auto-populated data would also come in, and the user also would be able to put in his own data. Let's say you have missed a purchase, somebody has missed a purchase invoice, and you would be able to upload that. That was the initial idea. And then GSTR 3 would come in, which would basically be return of outwards, what is your sales, tax on those sales, minus tax on purchases, that is input tax credit. The net tax will be shown there and you will pay your taxes. That was the original plan before probably the portal came into picture. That was the initial plan. But as we speak today, GSTR 2 and GSTR 3 stand suspended. The whole idea has now changed. So what has basically changed in these returns? GSTR 1 is still the same. It is a return on sales. Whatever your sales are, you will have to enter it into that, and we will go deeply into what exactly the GSTR 1 is. GSTR 2, like I said, is suspended. GSTR 2A was the first ITC return that came in for input tax credit. Now, this is a dynamic return for a given month. And we have explained quite in detail of what this 2A and 2B is in an early input tax credit webinar that we did a few months back. And you can please revisit that webinar on our YouTube page and get more details on input tax credit. But just to say in brief, GSTR 2A is basically a return that can keep changing. Every time your supplier files a return for a particular month, that data will go and sit in this GSTR 2A. While GSTR 2B, also an input tax credit return, is static. Once it is freezed after a particular point of time, this is every 13th of every month after the GSTR 1 and IFF filing gets over for the month, this GSTR 2B gets freezed. It's a static return. It will not change. After 13th of every month, it gets freezed. So that is GSTR 2B. GSTR 3, like I said, stands suspended. And instead of GSTR 3, the government introduced something called a GSTR 3B, which is basically just a summary return. What does it say? It just says net tax payable, which is output that is on your sales, input on your purchases and expenses, and that output minus input is the net tax to be paid, and you have to go ahead and pay that by way of a challan. So that is the summary return. But GSTR 3B, although we say it's a summary return, it's not as simple as it looks like, and that's why we are going to get into more detailed analysis of that return in a few later slides. GSTR 4 is very, very in particular for composition dealers. Now, composition dealers are those traders who operate within a particular state, and they are people who do not have to maintain every single invoice record of their sales and purchases. They just have to pay a certain percentage of tax on their turnover. It is applicable only for a certain turnover, which is 1.5 crores. If your turnover is less than that per annum, you can go ahead, and the criteria is the turnover should be less than that limit. You should be a trader, a dealer in goods, and you should also be only operating within a particular state. If you're doing interstate sales, you cannot opt for composition. So initially, the government introduced a return called CMP08, which was a different kind of a data capturing return. But then that has all been removed, and now it has been replaced by GSTR 4. GSTR 5 is that return that needs to be filed by non-resident taxpayers. Now, who's a non-resident? There's a definition under various acts. Income Tax Act has a definition for a non-resident. The Foreign Exchange Management Act, which is FEMA, has a definition for non-resident tax. Similarly, GST also defines who's a non-resident taxpayer. But if you're a non-resident taxpayer registered, special cases, you'll have to file this return called GSTR 5. GSTR 5A is a special return again. Online information database access and retrieval services. Basically, it's called OIDAR in short. Any database services, let's say you're using a certain access to a database like Bloomberg, you're using access to international data, and or you're using a software where you're trying to access certain data and you're using all of the data in your business. That service in particular is called an OIDAR service, online information database access or retrieval services. And people who are engaged in that business, software providers, database providers, who are engaged in that particular business, they have to register in GST separately and file a special return called GSTR 5A. We will not delve much into that because it's again a very, very, very specific piece of law. GSTR 6 is to be filed by an input service distributor. Now, who's an input service distributor? Basically, if you look at any multinational companies, there may be a central head office and there may be multiple branch offices. The central head office will receive all the bills in its name, all expense bills they will receive in their name. But this may be pertaining to a particular branch. The expense may be pertaining to a particular branch. So what these head offices will do, they will receive all the input tax credit and they will distribute it to their branches depending on where the expense is incurred. That is called an input service distributor. And such an input service distributor should be filing a return called GSTR 6. GSTR 7 is specifically for tax deducted at source and tax collected at source returns. Again, this TDS and TCS provisions in detail has been discussed in a separate webinar. You can please visit our YouTube page and look at that webinar video as well to get much more information on the TDS and TCS returns. GSTR 8 is required to be filed by any e-commerce operator, Amazon, Flipkart, all these people are e-commerce operators, and the GSTR 8 is a return that is to be filed by them. GSTR 9 is an annual return. As of now, it is to be filed by anybody having a turnover of more than 2 crores. GSTR 9C is a reconciliation statement that needs to be filed by anybody having a business of more than 5 crores. And this basically is a reconciliation between audited books of account and the GST return. And this 9C is to be signed by a chartered accountant in practice. GSTR 10 is called a final return. So whenever anybody wants to do a suo motu, a voluntary cancellation of their registration, they want to go ahead and cancel their registration. After the cancellation, they will have to file one final return disclosing all their liabilities and pay off all the remaining taxes. That final return that you file post filing an application of cancellation is called the final return. So this in essence is the different types of GST returns. And today we will head into very specifically into GSTR 1 and 3B. But just to give an idea of what these returns are, we were just discussing these type of returns. We will now straight away step into what is GSTR 1. So GSTR 1, what is it? In very simple terms, it's a return on outward supplies. Now, what is outward supplies? Outward supplies can be sales, can be services, basically anybody who's supplying, who's selling goods, supplying services, that is called an outward supply. And all these outward supplies are to be declared in the GSTR 1. So that in essence is what the GSTR 1 is. Now, when does it have to be filed? It has to be filed there are two kinds of filers. There is a quarterly filer, there is a monthly filer. If you are a quarterly filer, which is again, there is an option given by the government. If you are below a certain turnover, you can be a quarterly filer. So if you're a quarterly filer, it needs to be filed from the end of the quarter. So let's say for the September quarter, it needs to be filed by 13th October. 13th day of the succeeding month from the end of the quarter. So if it is April to June quarter, it's July 13th. July to September quarter, it's October 13th, and so on and so forth. If you're a monthly filer, then 11th of the succeeding month. So for September, it will be 11th October. For October, it will be 11th November. For November, it will be 11th December. So like that, the 11th of the succeeding month is the due date for filing the GSTR 1 for monthly filers. And who all are supposed to file a GSTR 1? Basically, every non-composition taxpayer has to file GSTR 1. Composition will file GSTR 4. So this is, in very simple terms, what the GSTR 1 is, when it is to be filed, who all are required to file it. Now we will get into very specific details of this return. What should any MSME owner or a GST registered taxpayer, what should they keep in handy before you get ready for your GSTR 1 filing? And why we insist on these documents is that you are given 11 days from the end of the month, 13 days from the end of the quarter, in case of quarterly filers. In that period of time, it's very critical that in the first few days after the closing of the month, all these registers are prepared, kept ready, so that either you're using a tech or you're using the help of certain professionals, you are able to send them this exact data, which will solve everybody's time, and it will also be a very easy way of filing your returns with minimal errors. And if you keep these details ready, there will not be any rush on the last date by trying to find returns, trying to find data when you're filing the return. So it's better to keep these handy before you head to filing the GSTR 1 on the portal. The first very important document is the business to business sales. That is registered taxpayer sale to registered taxpayers. Now the B2B sales, what all do you have to keep? The GSTI number of the customer is very, very important. Invoice number is important. Date of invoice is important. The quantity supplied, if you're supplying goods, and the quantity supplied is important. HSN also is extremely important. The HSN code, that is the 4-digit or 6-digit code, depending on the turnover. Again, you have to code 4 digits or 6 digits. But that HSN is extremely important. That needs to be kept ready. Taxable value needs to be kept ready. What is the value on which the GST is calculated? And the breakup of the tax value. How much GST, how much SGST, how much IGST. These details are required to be maintained in B2B sales. And we will also very specifically look at screenshots from the portal to see why this data is required and where this data will go. That we will show it to you in the later slides. The next data requirement is B2C sales. B2C sales is basically a business to consumer. These are not basically registered taxpayer to registered. You are basically filing registered to unregistered taxpayers. In case of B2C supplies, the state of supply becomes very critical. That needs to be maintained. And the rest of the items are the same as the B2B. Invoice number, date of invoice, quantity supplied in case of goods, the HSN, taxable value, tax value, all that is anyways the same. The next important aspect is export invoices. If you have exported any goods or services outside India, the details of that needs to be again maintained, invoice number, date, the taxable value, and the tax value. The last and very critical, something that usually gets missed, is the credit note and debit note. Now, credit note is in case of sales returns. Debit note is in case of any changes in the invoice. If a debit note has been raised to collect more money from the customer, or in case of any issues with the price, any issue with quantity, you would have raised a debit note. And this credit note and debit note are required to be maintained. A list of the details has to be maintained. Very important also, please have a reference of the original invoice number. Against which invoice was the credit note or debit note raised? These details are extremely important. And if it is in case of a B2B credit note or a debit note, the GSTIN of the customer is also obviously mandatory. There is nothing new in that requirement. Now, apart from these are basic details that anyways will come out of your books of account. What do you need to do? Probably a little special in case of the GSTR 1 filing. So you will have to basically maintain a segregation of the sales invoices under reverse charge. So reverse charge, again, we have discussed in detail in one of our previous webinars. You can refer to that. But in very essence, if there is a special case of a reverse charge where your customer will not pay you the GST, but he will pay the GST directly to the government, in those cases, which are the invoices under that reverse charge has to be segregated. The B2C invoices above 2.5 lakh. So if you have a B2C invoice, you have to segregate it between above 2.5 lakh and below 2.5 lakh, and that needs to be kept in handy, because above 2.5 lakh B2C invoices are called large invoices. Below 2.5, it's the regular B2C invoices. And the last requirement is if there is an export of goods. We saw export invoices. If that is for an export of goods, the shipping details are very important. What is the port code? What is the bill of entry number? That also becomes very, very critical. So I think before we head, I'm seeing a few queries. This presentation will surely be shared after the webinar, and we will take the questions in the last. So if you can please make a note of your questions, either please drop it in the chat box, or we will allow you to ask questions one-on-one after the webinar gets over. So going ahead, what are the fields in the GSTR1? We basically divide it into two kinds of fields: an invoice-related field and other fields. I will show you screenshots because that makes it very easy. Otherwise it can become just information. We will show a few screenshots where you can clearly know where to fill this data. But invoice-related fields, basically, like we said, B2B invoices, there is a separate field for it. There is 4A, 4B, 4C, 6B. There are different tables for filling up B2B invoices. So those are the invoice-related, B2B invoice-related fields. There are certain tables for filling B2C invoices, which are large invoices, more than 2.5 lakh per invoice. And then there is credit notes, credit note and debit note for registered taxpayer, B2B, credit note, debit note for unregistered taxpayers, which is B2C. The other invoice-related field is export invoices. Then there is amended B2B invoices, amendment B2C invoice. Basically, next are all amended fields. We saw B2B, B2C, credit note, export invoices. All of these can be amended in the subsequent tax period by filing something called an amendment. And for each of these tables, there is an amendment table. So for B2B, there's an amended B2B invoice table. For B2C, there's an amended B2C invoice table, so on and so forth. So for every invoice-related field, you have an amendment field. The next GSTR1 that you are filing or subsequent GSTR1s that you are filing, you can make certain amendments. Again, that is restricted of what you can amend. You cannot amend everything in an invoice. A few things like you can amend probably the tax value if there was an incorrection. You can change that. The tax value, if probably you did not classify correctly between CGST, SGST, or CGST, SGST, IGST, all those things can be amended. Date of invoice also can be amended only if it is within the same month. You cannot change the month of the invoice. Those kind of small changes can be made, and for that you have the amended screens. These are the invoice-related fields. Now, what are the other fields? Other than that, you have B2C others. B2C others is basically all invoices less than 2.5 lakh per invoice. So if you have a B2C invoice of more than 2.5 lakh per invoice, that is called large invoice. Every other invoice is called other B2C invoices. The next table is something called nil-rated supplies. Now, what are nil-rated supplies? Basically, GST, in case of nil-rated supplies, says that this is not exempt from tax. It is not exempt, but today it is taxed at 0% rate. That's what. So there is a very clear distinction between what is nil-rated and what is exempt. Nil-rated basically means that it is still taxable. It is taxable at 0% rate, and there is a schedule specified for which goods are taxed under that. So that disclosure happens in this table. Table 11, very critical, is tax liability on advances. Now, the GST, there's something called a point of taxation. At which point do we have to pay GST? And that says if you receive an advance against a particular contract, when you receive that advance, on that advance you have to pay GST. Let's say, for example, very simple example, that Mr. A is giving services of rupees 10 lakh to Mr. B. GST of 18% is levied on that. Typically, what would have happened? A would have raised an invoice on B for 10 lakh plus 18%, 1,80,000 GST. B would have paid A the 11,80,000 and A would have deposited. That is simple case. Now, the contract says that B will have to pay 5 lakh advance to A before the work starts. In that case, 18% of 5 lakh is 90,000. Mr. A has to pay to the government. That is on advance. So to disclose those advances, you have to use table 11. Now, when the whole invoice was completed, the whole contract was completed, on 10 lakh, you raise an invoice. Now, Mr. A has already paid GST on 5 lakh. Why should he again pay GST on the entire 10 lakh now? So that is why, to be able to say that, look, 10 lakh is the invoice value, but I have already paid GST on 5 lakh and only on the balance 5 I am required to pay GST now. So to show this, the department allows something called adjustment of advance. That is also required to be given in the second part of table 11. Table 12 basically is talking about HSN-wise summary. Let's say a person has 2 or 3 HSNs in which they are doing business in. For example, let's say one person has a business in 8544 HSN, 85333 HSN, and 8507 HSN. So now 2 invoices may have gone in 8507, 2 invoices in 8533, 1 invoice in 8544, let's say. So to show that the HSN-wise for 8544, I have so much of tax value and so much of taxable value and so much of tax value. For the next HSN, I have so much of taxable value and so much of tax value. To summarize this HSN-wise is where this table 12 becomes mandatory. I think this is extremely critical for every MSME owner to note. HSN was not mandatory initially, but today HSN has been made mandatory, which means every small MSME owner needs to know which HSN in which they are doing business. Please start quoting the HSN on your invoices. It is very, very important. GST department has started sending notices to people who are not mentioning HSN in the GST returns. It is very, very important to put the HSN number on all your sales and service invoices. And please do make a summary HSN-wise of your sales and disclose it in the GSTR 1. Non-disclosure can amount to a notice. It's very, very important to note. The next table basically is the documents issued. Now, documents issued, basically the department says how many sales invoices have you issued, how many credit notes have you issued in total in numbers, 10 sale invoices, 5 credit notes, 4 debit notes, and so on and so forth. Whatever the documents that you have raised, payment vouchers, receipt vouchers, whatever that you have raised in terms of a document, how many documents have been issued, that needs to be mentioned in table 13. And like we saw in B2B, there is amendments involved in the invoice related field. Even other fields, you can go ahead and amend. Now, advance received, adjustment of advance, that also there is an amendment field. For the advance received, there's an amended field, and for B2C also there is amendment. So amendment anyways is common, but like I said, there are only certain cases of amendment that can be done. In every case, you cannot make amendments. So these are largely the fields in GSTR 1. Now, these are some of the screens. It makes it very easy for you to know what we are saying here. Basically, this is a B2B entry. Like I said, GSTIN becomes very critical to know. Once you fill in the GSTIN, the recipient name automatically will populate. So you cannot enter a wrong GSTIN. What the department is allowed is to create a master in the portal itself. So if you enter the GSTIN and let's say you know that you're going to do recurring business with this guy going forward, you can save his name in the master and you can keep it like a drop down which you can use later. But it's not very, I would not say it's very 100% user friendly, or it's not like a database. It is better to maintain a database separately on some whichever tech product that you're using or on your books of account. But anyways, you can create some masters in the department portal as well. So you have to enter the GSTIN. You will enter the invoice number, invoice date, total invoice value. Here also a lot of MSME owners make a few basic errors in terms of entering it. Total invoice value always means taxable value plus tax value, which means if you have made a supply of invoice number 1 dated 1st October 2022 for 10,000 rupees plus GST, that is 1,800 rupees, total invoice value is 11,800. Taxable value plus tax value, and that has to be entered here. Point of sale will be the state from which you are selling. For example, 29 is Karnataka, 33 is Tamil Nadu, 27 is Maharashtra. So all that can be entered in the place of supply. And once these details are entered, another table comes where you can show the different rates. If it what is it at 0%? Is it 3%? Is it 5%? Sorry, is it 0, 1.5? Is it 6? All those percentages can be mentioned. And against those percentages, you can mention what is the taxable value and what is the tax value. So here, for example, you had supplied 10,000, 18%. You will mention in the total invoice value 11,800. In the below table, against 18% or 9% SGST, 9% CGST, you will mention taxable value 10,000 rupees, CGST will be 900, SGST 900, or if it's an IGST invoice, you will mention 10,000, IGST 1,800. So the breakup of taxable value, tax value will come at the bottom table. Here, invoice value has to always be taxable plus tax value. So this is a common error. So please pay attention to this detail, because otherwise, it can cause reconciliation issues here and there. And very, very important here to note is that if this particular sales invoice attracts a reverse charge, which means your customer will not be, usually what happens in forward charge, customer pays you GST, you pay to the government. In reverse charge, the customer will directly pay the GST. But because it's a reverse charge, does it mean that you don't have to declare it in the GSTR1? That is a common notion which is incorrect. It has to be disclosed in your GSTR1, but you have to tick this box here. You'll be able to see something called a supply attract reverse charge. You have to tick that column to ensure that this is a reverse charge invoice, and all the other data fields are the same here. There is no other change in data capturing. Very similar is B2C. B2C entry large invoices means B2C invoices which are more than 2.5 lakh rupees per invoice in terms of value. So here again, the point of sale has to be entered, which is basically the state, the invoice number, invoice date, total invoice value again is taxable value plus tax value. So in this example also, like I said, if it is taxed at, let's say, 18%, you will mention 11,800 total invoice value. In the item-wise details, against 18%, you'll have to mention the taxable value and you'll have to mention the tax and the cess applicable. So this is in simple how a B2C large invoices will look like. Export invoice, here is where every other detail is the same. Invoice numbers and all are the same. If you have a letter of undertaking, which means you are exporting goods or service without payment of tax, then you have to select in the drop down without payment of tax. If you select with payment of tax, then just like a B2B invoice entry, you have to enter all the taxable value and amount of tax and all that here. If you remember, in one of the data document fields, we said the special field is shipping bill number, the bill of entry, port code, and all that is critical. All that will have to be mentioned in the invoice table here if you're exporting goods. So if you're exporting goods, please keep the port code, shipping bill, and the bill of entry date handy so that you can fill it while you're doing the GSTR1 data entry. Credit and debit notes. Again, the data entry is very, very similar, just like how we saw B2B invoices. The same data fields are captured here, but instead of putting an invoice number here, you will be putting a credit or debit note number. Everything else remains the same here. HSN summary. This is again, like I mentioned, a field that commonly gets missed out in GSTR1 returns. Please ensure that this table is filled in every GSTR1 return. It is now mandatory for every taxpayer to fill this HSN-wise summary. So if you're using 4 different HSNs to make different kinds of sales, against each HSN, how much is the quantity if you're doing goods, how much is the quantity that you supplied, at what value you supplied, what rate, and what is the tax. That needs to be clearly mentioned here. Now, let's say against one HSN, very unlikely, but again, it's possible that against one HSN, you may have 2 different rates, 2 different conditions you may have had, and against one HSN, it's very unlikely, like I said, but in the rare case that you have one HSN, but you're doing 2 different rates of tax, then in that case, you have to enter both as 2 different summaries. So if let's say you have 8507, it is also applicable at 18% for some cases and 5% in some cases. You have to enter HSN 8507, select the quantity and taxable value. Under it, you will select 18% and mention the tax breakdown. Again, you will enter 8507. You will have to enter the rate as 5% in that case and enter the tax breakup. So this is how HSN-wise summary needs to be filled up. But please be very, very careful that this data is entered and it should never be missed, because now GST department has started sending notices to taxpayers who are not mentioning the HSN on their GSTR1. The documents issue table, pretty straightforward. Whatever number of invoices you have issued. Now in this sample, we're just showing you the taxpayer has issued 28 sales invoices. You will mention the serial number. Now we have just mentioned 001 to 028 because this is a dummy sample. But let's say your sequence for that one starts from 40 and you have issued up to 50. The serial number starting will be 40 to 50. Total number 10. If you have cancelled anything, you will have to mention it and you'll have to add. Similarly, for different types of documents, you can ensure how many, you can just enter what is the serial number, starting serial number, ending serial number, and what is the total number of documents issued. This also needs to be filled in the GSTR1 table 13. So this is about GSTR1. We will now head into the other summary return, which is called GSTR3B. Now, what is GSTR 3B? Very simple, like we said, GSTR 3B is a summary return. So what do we mean when we say summary return? How much was your sales? Tax on that sales is your outward tax. How much was your purchases? Tax on that is called input tax. Output minus input is equal to net tax to be paid for that month. And declaring all of the summary in a return is what is GSTR 3B. What is the date for filing? Similarly, if you are like GSTR 1, this also can be monthly or quarterly. If you're a quarterly filer, you will be filing your GST returns by the 22nd or 24th. 24th is a special states for whom the date is 24th, but you can always consider that the due date is 22nd from the succeeding month from the end of the quarter. So for September quarter end, it is 22nd October, which is coming in another 4 days time. Monthly filers, the due date is 20th. It is basically 2 days from now. If you're a monthly filer for September, October 20th is your due date. For October, November 20th is your due date, and so on and so forth. And whom is this applicable for? Again, all non-composition registered taxpayers. Basically, this GSTR 3B is applicable. For composition, GSTR 4 return is applicable. Now, what do you have to keep ready? If you have already filed your GSTR 1, your sales register anyways is with all details is anyways ready. You don't have to do anything special there. You have to now pull out your purchase register. You have to then pull out input tax credit register. Basically, the input tax that is in your books of account, CGST, SGST, IGST breakup. If there is any tax to be paid under reverse charge, now in GSTR 1 was the reverse. You are supplying goods under reverse charge, which means your customer will pay the tax on reverse charge to the government. This is in case where your supplier supplied you a bill. Please keep in mind that you are purchasing something. Your supplier has supplied something to you which is under reverse charge, which means you don't have to pay the GST to your supplier and he pays to the government. You will have to pay the tax directly to the government on behalf of your supplier. That is reverse charge in this case. So details of that has to be maintained. If you have done again export sales, which anyways we specified in GSTR 1, that document will be ready. What is utmost special in GSTR 3B is the reconciliation of that input tax credit register from books of account, reconciling that with the GSTR 2A and GSTR 2B also. Both these reconciliations, basically what is there on the portal, input tax rate on the portal versus input tax rate in your books of account, that needs to be reconciled. And that is by far the most critical thing that requires to be done for GSTR 3B filing. So these are the data to be kept ready. Now, one special scenario. Let's say you have filed your GSTR 1 and this happened on the 11th of the month. Then when you are trying to prepare for the 3B by doing your purchase reconciliations and all of that, you realize that some sale invoice got missed. Your accountant has missed or you have missed something. Possible, human error is always possible. So if that is the case, there is some difference between the GSTR 1 and 3B. Why the difference is, please maintain a separate reconciliation for that. You can always declare it in the 3B and then declare the difference in the next GSTR 1. There is no problem as such, but please keep the reconciliation handy because the department is doing basically a data matching and they see the GSTR 1 and GSTR 3B, there is some difference there. They may send you a notice. So if you have a reconciliation ready, you can immediately explain to the department that because of this issue, you ended up having a little bit of an issue in the GSTR 1 and 3B reconciliation. Now here, what are the fields? Basically, 3B gets divided into three simple fields. Outward supply, which is sales, input tax rate on your purchases, output minus input equals tax payment. So that is the fields in GSTR 3B. Under outward supply, there are a few breakups. There's outward taxable supply, which basically means all the supplies at different rates of GST. Outward supplies which are zero rated, nil rate, like we spoke about the nil rated, zero rated. Outward, so basically exports, if you are making exports without payment of tax, that has to be declared as zero rated. So this is a special column. The next one is nil rated and exempt goods. That has to be declared in a separate table. Inward supply is liable to reverse charge. Like I said, you have bought something from your supplier, but that is on reverse charge, which means you have the liability to pay the GST to the credit of the government. So that will have to be declared here. Again, to know more about reverse charge, different scenarios where reverse charge is applicable, please do visit our other webinar on reverse charge. In fact, there we have also explained how you need to file a GSTR 3B if you are buying something on reverse charge. The next one is non-GST supplies. Now, what is non-GST supplies? Basically, these are supplies which are outside the ambit of GST itself. No GST is applicable on that. If there are those kind of sales that you are making, electricity, fuel, these kind of sales, non-GST supplies, that also has to be declared here. A special field has been added recently from 5th October 2022, which is for e-commerce operators. So there are certain special details that needs to be filed by them. Now you will see a small star mark that we have mentioned. Now what that star mark is, basically in case of outward taxable supplies or data filed by e-commerce operators. Out of this, if you have any interstate, that is between two states, if you have supplied to either unregistered person, B2C interstate, that you have done, let's say, interstate transaction to composition suppliers, or UIN holders are a very specific category of GST registered taxpayers under certain special circumstances. So if you have made any interstate supplies from one state to another to these particular persons, that detail has to be disclosed separately. That is just a disclosure, has no tax impact, but there's a disclosure impact. So that is the outward supplies. In input tax credit, simple, we have to declare if you have imported any goods or services, tax on that has to be disclosed, input credit on reverse charge again. So you will see in table 1, inward supplies liable to reverse charge, that you have to pay in a month and you will get credit of that in the next month. So if you are mentioning an outward supply, inward supply liable to reverse charge, the credit of that can be claimed under input tax credit. So that's exactly what we are talking about when we say inward supplies on reverse charge under the input tax credit table. The next item is inward supplies from an input service distributor. We discussed what an input service distributor is. And if your head office has basically distributed any input credit to you, that input credit needs to be disclosed in this particular table. Now, after declaring all of these ITCs, if there's something that is balanced, so basically every ITC other than import, other than reverse charge, other than input service distributor needs to be disclosed under ITC, all other ITC. Out of all this ITC, if you have reversed something, either because there was a purchase return or in certain special circumstances you have reversed the ITC, that has to be disclosed here. We will discuss what this ITC reversed is a little in the next one of the next 1 or 2 slides. If there is any ITC reclaimed and ineligible ITC, again that we will disclose we will discuss when we come to ITC slide. And if there are any exempt, again like we discussed nil-rated exempt and sales and non-GST in sales. Similarly, if you have nil-rated exempt or non-GST inward supplies, that has to be disclosed under input tax credit. Outward minus inward is the final tax payable, that has to be disclosed. If there is any interest for late tax payment, that has to be disclosed. If there is any late fee for delayed filing of return, that has to be disclosed. And if there is a TDS or TCS credit, again TDS TCS has been discussed very much in detail in one of the previous webinars. Please do visit that. If there is any credit on account of TDS or TCS, that also has to be disclosed in the GSTR 3B. Now, how do your tables look? This is very typically the outward supply. So basically everything, let's say you were taxed at 18%, 5%, 12%, different taxable supplies may be there. All that has to be disclosed in table A. You disclose a taxable value, you show how much is the IGST, CGST, SGST, and cess breakup. Next, exports. Zero-rated outward taxable supplies means exports done under a letter of undertaking without payment of tax. That has to be disclosed in B. Exempted outward supplies has to be disclosed in C. Inward supply liable to reverse charge, like we discussed in the previous slide, in D, and non-GST has to be disclosed in E. So this is pretty much straightforward. This is the new amendment. With effect from 5th October 2022, this table has come for everybody who's on the e-commerce platform. E-commerce operator, Amazon, Flipkart, all these people will have to disclose all their details in the first serial number. For any person who is doing their supplies through the e-commerce operator. So Amazon is the e-commerce operator. Let's say you are a dealer, Mr. A, located in Bangalore, who is basically listing all your goods on Amazon and selling it through Amazon. So you are a supplier who's registered through that e-commerce operator. In that case, they have to disclose all their sales in table 2. Serial number 1 is by the e-commerce operator himself, and table 2 is by people who are making their supplies through these e-commerce operators. So this is the added disclosure with effect from 5th October 2022, which has come in with the GSTR 3B. Now, specified interstate supplies, we spoke about this in a few slides back. So I will just circle back here. Out of table A here, 3.1 table A, outward taxable supplies. Out of this, out of table 1 in 3.1.1, that is taxable supplies by e-commerce operator. Out of these 2 columns, if you have any interstate supplies from one state to another, which you are making either to unregistered people or to composition taxpayers or to UIN holders, if you are having any such sales, that has to be disclosed in this particular special table in GSTR 3B. It's called table 3.2. So that has to be disclosed here. Now let's come to this is probably the biggest issue in GSTR 3B. First few columns, ITC available is pretty much straightforward. If you have import of goods, you disclose it here. If you have import of services, you disclose it here. And please note, just circling back, here you will note in sales, you have to disclose the value of sale and the tax value. But please note, when you come to input tax credit, you have to only disclose the tax values here. The taxable value or the purchase value need not be disclosed. It is only the tax value which is disclosed in this particular input tax credit table. So you have goods, you have services, import of goods, import of services, pretty straightforward. Invert supply is liable to reverse charge, pretty straightforward. ISD is also straightforward, all other ITC. So this is pretty much all your input tax credit. ITC reversed. Now, what this ITC reversed basically is let's say you have certain ineligible, let's say you have basically had a case where you are supplying both exempt goods and taxable goods. The law says that against exempt goods, you cannot take input tax credit. Let's say you have made 100 rupees of purchase, and out of the 100 rupees purchase, you use 50 rupees to make taxable sales. You use 50 rupees to make exempt sales. Only the ITC on 50 rupees, which you have used to make taxable sales, only that can be claimed. So in the total ITC, the ITC that you have used for making exempt supplies, that you have to reverse. That reversal needs to be done here. Section 17.5 basically, 17.5, what does it say? If the law states that if you are buying a goods from a certain person, you have to make the payment of the value plus GST to them within 180 days. Within 6 months, you have to pay the value of the goods or services and GST to them. If you do not do that, then you are liable to reverse your GST. So that reversal is what you are talking about in section 17.5 and the rules of 38, 42, and 43. If there is any other reversal, let's say there was an accounting issue, last month instead of claiming 100 rupees, you claim 102 rupees because of an accounting error, and you want to reverse that to this month, that reversal can come under all other ITC reversed. Now, the latest amendment in GSTR 3B has added 2 additional details. Now, what does it say? Now, let's say Mr. A purchased goods from Mr. B. Up to 7 months, the payment was not made, but Mr. A had claimed the ITC on this. So after 6 months, when the time limit of 6 months expires, Mr. A will reverse the ITC, clearly because the law specifies so. But by the 8th month, Mr. A and Mr. B reconciled, they sorted their problems, and Mr. A paid all the dues. The law states that if you have reversed GST before, but subsequently you paid the whole money to Mr. B, when you paid the whole money, then you can again claim back your ITC. That is what we are talking about in this case. So you have reversed it after 6 months, you went by the law and you reversed it. And then you settled with Mr. B and you paid him all the dues. Now, when you pay him all the dues, you are again eligible to claim that ITC. So when you're reclaiming that ITC, that is what you will mention in this particular section. And now the other specific issue says that if there is any ITC restriction, either on account of point of supply or either on account of ineligible credits, in all these cases, if there is any issue that is ineligible ITC, that has to be also disclosed in this particular table. So that is basically what has now been added. But very critical is the new added sections is the reversal of ITC. If you have not paid within 6 months, that the fact that you have to reverse it. If there is ineligible credit, blocked credit, that is not eligible as per there is a specific section in ITC which talks about block credit. Again, we have discussed this in detail in one of our other webinars. So if that is the case, you have to reverse that. If you are using any of your input tax credit for making exempt sales, that has to be reversed. So all these cases are out of ITC reversal. So that has to be separately disclosed in the input tax rate ledger. Now, this may seem like a very straightforward table, but maximum notices in GST today are coming out of issues with input tax credit. So it makes it's in everybody's interest, in the MSME's interest, to please make a note of all these tables that come in the input tax credit and ensure that the disclosure is properly done. Now, once the output and input have been disclosed, this is a very simple table. In tax payment, what is the total tax that you are required to be paid? And out of that, how much have you paid through credit? How much are you paying through cash has to be disclosed here. And what is the interest to be paid, late fee to be paid? All that needs to be disclosed. This is pretty much an auto-populated table by the GST portal itself. You don't have to do anything much here, except for verifying it before filing. That's about what is there in the tax payment sheet. Now, why would we recommend using KYSS, or basically why is it better to use tech to file all these returns? Now, as and when the volumes are going up of businesses and looking at the way that the government is looking to track transactional level data, it makes it very, very critical for every business to be very careful of what they are filing in their GSTR 1 and GSTR 3B. And clearly, this is also prone to a lot of error. If you're doing everything manually, there's obviously going to be data entry issues. But the benefit of using an automated reconciliation tool like KYSS is, now once you have entered your sales data in the e-invoice portal that we are offering, and from there all the data will basically go and sit in your GSTR1 sales data. So you don't have to again prepare a separate working. You have raised the invoice, all the data fields will get captured and go sit in your sales data. There is end-to-end integration there. You would have raised e-way bills. That e-way bill will be matched with the sales data to ensure that there is no data mismatches. GSTR 1 and 3B will be reconciled. Most critical aspect in GSTR 3B is the purchase register or the input tax credit register and GSTR 2B reconciliation, two-way reconciliation. That is done, which will ensure 100% of your eligible credit is claimed. And while they're doing all of these reconciliations on a tech platform, which is automated and digitized, it makes it very, the risk of notices will become very, very less. In fact, it can completely avoid the risk of notices, because if there is complete integration, end-to-end integration of data, there will be no mismatch. And that will ensure that you will not have any notices, and it will save a lot of time and effort. Because otherwise, looking at the way the transactions are increasing, looking at the way compliances are increasing, doing everything manually will make it very, very difficult to file your GST returns. So it makes great sense to use an automated tool like KYSS to basically go ahead and ensure that there is no data mismatch. All these multiple complicated fields of GSTR 1 and 3B can easily be captured, and you can be rest assured that all your compliance is met and there will be no risk of notices. That is why we strongly recommend that MSME owners who may not have access to the best of resources, or who may not have access or may not have the luxury of time to do all these reconciliations manually on a month-on-month basis, it is better that these kind of reconciliation softwares are used, which will reduce the time and effort for return filing. So this is pretty much what we have, and you can always reach us out on the different social media handles, or we do have a WhatsApp number. You can always send a hi on that WhatsApp number. It's on your screen. You can just send us a hi on that number, and we will be able to answer your queries.